Finance. Nothing has more jargon in it than the world of business. And when it comes to words that we don't understand, then finance is the daddy. Really though, it's just as simple as cash in your pocket. Money you owe and things you own. Let's have a look at some of them. Two words everyone gets stuck on are gross and net, but it's pretty simple. Gross is inclusive of any tax that needs to be added, and net is after any tax has been taken off. So to simplify, if you sell something for 200 quid plus VAT, that would be £240 gross or £200 net. If you make £480 profit in a week, but have to pay £80 of that in tax, then £480 would be the gross profit or £400 net. It's simple, really. Talking of profit, that's an easy one. That's how much money you've made. If something costs you 100 quid to make and you sell it for 200 quid, then you've made yourself 100 quid in profit. Loss. If something costs you 150 quid to make and you sell it for 140 quid, then you've lost yourself a tenner. Scale these up, take one from the other, and you get a picture for how much money you should be making overall. This is referred to as profit and loss, or P&L. Tax. Well, I think we all understand what tax is, but in business it comes in many different guises. PAYE stands for pay as you earn, and is the money that gets taken out of your paycheck. Corporation tax. That's the money that you have to pay as a company on the profits that you make. VAT, also known as VAT, stands for value added tax, and is the money chargeable on certain goods and services. The VAT you charge goes straight back into the government. However, in most instances, the VAT that a company pays on stuff can be claimed back from the government, if the company is VAT registered. This all gets worked out on a VAT return and can get quite complex, but ain't that what accountants are for, eh? Whatever kind of tax it is, the money goes to the government to pay for things like hospitals and roads and those other things that we all kind of need at some point. Assets again, these come in different forms, but by and large you can think of them as stuff that you own. If you buy a company car, then that's an asset. If you buy a building, then that's an asset. But if you rent a car or you rent an office, then they aren't assets. Cash in the bank, that's an asset. Money that's owed to you, that's an asset. Any stock you may have bought, if you own a shop for example, then that as well, it's an asset. Cash flow. That refers to money coming in and out of the company on a daily basis, whereas turnover is the amount of sales or other income for a company over a given time period, such as a month or a year. Creditors. They are people who you owe money to, whereas debtors are people who owe you money. An aged debtors report is a report of who owes you money and how long they have owed you money for. Thanks for watching. Don't forget to give us a thumbs up if you like the video, and to stay up to date, hit the subscribe button below.